Hi everyone. Etsy reported fiscal 2022 fourth quarter earnings results. Of course, Etsy is one of my top 23 stocks to buy for 2023. After this earnings update, I'm going to update that recommendation and say if it's still one of my top 23 stocks to buy for 2023, or is that recommendation changing following these earnings results. So you're not going to want to miss that. Let's get right into it. So revenue increased by 12.6% to 807 million in Q4. Earnings per share decreased to 77 cents in Q4, down from $1.11 in the same quarter the prior year. Gross merchandise sales decreased by 4% year over year. This comes on top of 17% growth in the same quarter the prior year. And this has been the headwind for Etsy. As economies have reopened, people are spending less money online and less money on Etsy. But the good news is that Etsy is a platform that brings together buyers and sellers. It takes a transaction fee off of each transaction that takes place on the platform, and that fee that it has been charging, it's been raising that fee. The take rate, which is what it calls that fee, increased to 20% in the most recent quarter. This was up from 17% in Q4 2021, but it was flat quarter over quarter. This was the first time that it's been flat quarter over quarter. It's been steadily rising over the last several quarters. And the good news here is that yes, Etsy is making it more expensive for sellers. And you might say, well, that sucks for sellers, and sellers are just going to leave Etsy's platform and go somewhere else. Maybe they're going to go to eBay, maybe they're going to go to Shopify, maybe they're going to go to Amazon to sell. The good news for Etsy stockholders, and this is why it's been one of my top 23 stocks, is that the whole industry is raising prices on sellers. Amazon is increasing the fees it charges sellers. Shopify is increasing the fees it charges sellers. eBay is increasing the fees it charges sellers. So there isn't somewhere that sellers can go where they feel like, okay, this platform isn't going to increase the fees on us. It's industry wide. And so sellers are going to look around and say, there's nothing we can do about it. It sucks, but it is what it is. So this is that trend industry wide is bad news for sellers, but that's great news for investors. That means the competition is decreasing, right? These selling platforms are not jumping over each other to try and attract sellers. They're saying, no, you know what? This is the fees we got to charge to make our business profitable and to account for rising expenses, and you're just going to have to deal with that. And when you're an investor, that's good news for you. When industry participants are not competing with each other, right? It's like the opposite of DoorDash and Uber. And I often say I dislike investing in those companies in that industry because competition is so fierce. It just leads to massive losses on the bottom line for those companies. Meanwhile, here you have Etsy. Yes, earnings per share decreased year over year, but it's still delivering profitable growth, right? Revenue increased by 12.6% while it's delivering healthy profits on the bottom line amid declining consumer sales. So this is why Etsy earned a spot on my top 23 stocks to buy for 2023. Let's go on here. Um, Another thing that's happening with these selling platforms is that they're bringing in advertising revenue. Etsy ads is gaining momentum. Advertising on Amazon, Shopify, eBay, they're all gaining momentum. They've got 89.4 million buyers as of the fourth quarter of 2022. Sellers, marketers would love the opportunity to influence the purchasing decisions of those 89 million people. And with Etsy ads, Etsy gets to bring in revenue even when customers don't buy anything, right? You've got a lot of customers that just open the platform, browse for 5 or 10 minutes and don't buy anything. Still, Etsy could still generate some revenue from those buyers just browsing with advertising. So that's a nice tailwind for Etsy. The company added 1.1 million buyers from the previous quarter, but that's still down 700,000 from the fourth quarter of 2021. It's nice to see this stabilizing. I was expecting the buyers losses to persist for all of 2022 because I know full well that economic reopening is gaining momentum. However, it was a nice surprise to see that it actually added buyers in the fourth quarter. And buyers are spending $132 more on Etsy in the fourth quarter of 2022 versus the fourth quarter of 2019. So the company has retained a lot of that growth it experienced during the pandemic. The industry overall is becoming less competitive, which is great news for investors. So to answer the question, is Etsy still one of my top 23 stocks to buy for 2023? And the answer is yes. After looking at these quarter's results, it reiterates my conviction to keep Etsy as one of my top 23 stocks to buy for 2023. All right, that's all I've got for this video. I hope you've gained some value from it. I know I truly appreciate your viewership, and I hope you'll come back next time for another video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.